The stock market is likely setting up a major rug pull from Jay Powell tomorrow during that FOMC statement. And stay tuned to the end because I'm going to share with you guys something the stock market is doing that's only happened 3 times since 1871. So today, the markets were making all-time highs, but look at the fear and greed index. We are still over into fear. That is a little bit troubling out there. What are people fearful of? Then we come over and look at how the indices started across the board today. The Dow was up 161 points. The NASDAQ was up 190 points. S&P 500 up 15 points, with the Russell 2000 being down 1.37. But more importantly, let's come over and look at advancing issues versus declining. While the market's making new all-time highs, we had 63.1% of issues declining on the day. Now, when we come over and look at the sectors across the board, do you guys see anything funny about that as we're making new all-time highs? We only had 2 sectors in the green, technology and basic materials. Every other sector was in the red today. And then we couple that when we come over and look at the volatility index. Today, the VIX was up 3.99%. We put this on a 5-minute chart. The VIX did not close very far away from the session highs. And this really all sets the stage because tomorrow is going to be very important. We come over and look at the economic calendar. What do we have coming out? Well, at 10 o'clock, we have pending home sales. Then at 2 o'clock, we get the federal funds rate. Then at 2:30, Jay Powell is going to be taking the podium. And I think this is where the rug pull is going to come into play, because when we come over and we look at what the market's pricing in, there's a 99% chance that the Fed will be cutting rates tomorrow at the next FOMC meeting. Could it be that when we first get the FOMC announcement, we see the market actually spike a little bit higher, which could mean that we see the S&P 500 and NASDAQ push up and make another new all-time high. And then Jay Powell maybe walks it back during some of his statements. Now, Jay Powell could come in 2 different forms. One, he could come in hawkish, which in that term would actually be bullish for the dollar index, which the dollar index was down a little bit. And if the dollar index is bullish off his hawkish statement, we'll probably see gold continue to drop down. Notice today, gold did push up off that low. And we look at the 4-hour pattern that we've been tracking, we see we have a price target down here right around 3,800, which has not been obtained yet. However, what if Jay Powell comes in dovish? Well, one, we can see the dollar index really start to fall off a cliff, and we can see gold finding a bottom and trying to rally on up. And let's just mark off where that would be in gold. I want to mark off candle bodies to the candle wicks down here. So somewhere in the ballpark of 4,019 all the way up here to about 4,083. Now, while the markets are pushing to new all-time highs, let's take a look at something real quick. We can see right here, Microsoft stock rises as new OpenAI partnership comes as a relief to investors. Now, we come over and look at Microsoft real quick, the chart of it. We see Microsoft gapped up, but did it close at the session highs? No. And if we look left, Microsoft did not make a new all-time high, even though the XLK was one of the strongest sectors out there today. Then we come over and look at this. UPS cut 34,000 jobs. And if we come over and look at the stock of UPS real quick, UPS today, big gap up. UPS closing up 8% on the session. And if we look, UPS had earnings before the bell, but keep in mind, tomorrow is not going to only be about Jay Powell. We come over and we look after the bell, we have Meta, we have Microsoft, Alphabet, Chipotle, Carvana, just to name a few. Then on Thursday, we also get Amazon, Apple, and Coinbase. And if we look at the big expected movers out there, notice today, UPS was expected to move 8%. And the option markets basically priced it into perfection, where we actually saw UPS up 8% on the day. Keep in mind, yesterday, we just saw that Amazon was announcing the largest layoffs in company history. Now, yesterday, they talked about 30,000 jobs. Right now, look at the article, it says 27,000. And I also seen other articles today talking about only 14,000 jobs. However, this is something I think Powell is going to actually talk about during the press conference. And one of the ways in which Jay Powell could actually be dovish, where he talks about he's concerned about the labor market. Now, if he's overly concerned about this, that could actually cause the rug pull to start to take place. We already know stocks are extremely high at this moment and most certainly overvalued at this point in time. We come over real quick and look at this. The stock market is doing something it observed just 3 times since 1871. History is crystal clear what happens next. If we come over and look at the 3 things that it's talking about right now, all 3 US stock market indexes have reached all-time highs this year. All right, we've seen that plenty of times. The Shiller price to earnings PE ratio gives a perspective on how expensive the S&P is. The S&P is the third most expensive in history. Now, look what it says right here. The first time the Shiller PE ratio top 40, which we're right around 40 right now, you can see it right up there, was in 1999. Well, what happened after 1999? We saw the dot-com bubble burst. That doesn't mean there couldn't be a little bit left more in the tank for stocks, but we're definitely getting a little bit elevated. Then we seen it happen top 40 in January 2022 during the pandemic bull run, and the S&P 500 went on to finish down 19%. So again, as you look at the market and you're getting all excited about all these new all-time highs, also as we look at the S&P 500, notice today we have one gap, we have two gap, and then we gapped up once again today. We come over and look at the 30-minute chart. Today, the S&P 500 was able to fill one of these gaps. However, when we go back over and look at the daily chart, as we're gapping up, making new all-time highs, look at the peak right down here in the MACD indicator. Is it making new highs? Absolutely not. And again, this is a warning sign, not a guarantee the market will go down tomorrow, but a warning sign. If you're trying to buy up here, you got to be open to the idea that you're likely going to suffer at least some type of correction in the very near future. Then as we come over, look at the 4-hour chart, again, look at these candles up here. Hanging man candle, inverted hammer, MACD indicator is screaming to the upside. 30-minute chart, we've already seen the MACD indicator roll over. And again, this is coming right before the Fed tomorrow. And I truly believe that the Fed cutting rates has already been priced in. I think really the wild card out there is, what is Jay Powell going to be saying tomorrow? Now, I will be streaming the whole FOMC statement and press conference tomorrow. So if you guys want to join me, make sure you subscribe and you have the bell notifications turned on for all. Right now, Apex 80% off is set to expire in a matter of hours. Take advantage of this offer. Use the link in the description box down below. Use code Mike at checkout. And we come over and look at the futures markets real quick. We look over here on the 4-hour chart with the weekly volume profile levels. Now, we talked about this yesterday. We had this A to B equals C to D pattern. We've already completed that. The market's a little bit of an overachiever. We have not quite hit the 127 extension, but look right down here. We have the gap from Sunday night. We have a huge minus development area here and another one right down here at 68.10. Now, we come over and look at the daily profiles on the 30-minute chart. Notice we have a couple untested point of controls, but now this is something that happens not quite often. We've had 3 consecutive days where we have not come back and tested the P point. And something I'm going to share with you guys when we look at the NASDAQ chart is even more glaring, which I can't remember the last time I've actually seen this on the NASDAQ, which we'll talk about here in just a bit. But the fact that we did not hit that, even more so, I want to target this tomorrow. Now, keep in mind, we are going to have 4 consecutive untested point of controls come tomorrow. The first one, 67.74. The second one will be right here at 68.38. The next one was right up here at 68.83. And then the one today from 69.13. So highly probable, even if we go higher tomorrow, we will come back and test 69.13 tomorrow. Now, before we come over and look at the NASDAQ real quick, take a look at crude oil. Again, crude oil is a huge warning sign. Could be the canary in the coal mine. Crude oil today suffered a pullback of 2.19%. And again, really starting to break down. And the reason I talk about crude oil is the fact that when crude oil is going lower, that's basically a clear indication there's less demand, less economic activity, which means the economy could be an economic slowdown. Now, we come over and look at the QQQs real quick. Today, monster move on the way up, another gap up. Can't stop, won't stop. MACD indicator now has been able to get above this peak right over here. But still, given how far we've actually pushed, I'm really surprised it's not up higher. Now, one thing I do want to do, let's grab our Fibonacci retracement of this last leg up. Now, notice where the 38% retracement is, right here at 617.44. In the event we go higher tomorrow, we'll simply grab the Fibonacci retracement tool until we finally start to get that retracement down. Now, once the market does start to turn, that 38% retracement will be the first point of interest I will be looking at in terms of the Fibonacci levels. On the 4-hour chart, MACD indicator screaming to the upside. We're way above these trend lines right up here. And again, we have several minus development areas on the profile, and we're going to see if we come back to visit that area. On the 30-minute chart, you can see we basically closed right around the point of control. MACD indicator already crossed to the downside, extremely elevated above the 0 line. Now, when we come over and look at the futures markets for the NASDAQ real quick, look at this last 4-hour candle, and this has been quite the push on the way up. Notice really all the way from the low right here on the 23rd, the market has not had any type of substantial pullback. It's just been up, up and away. The best that we've got for a pullback was basically a little consolidation right here. Other than that, it's just been straight up 0 pullbacks. Now, unlike the S&P 500, the NASDAQ not only hit the 100% ABC target, hit the 127, Is it going to push all the way up here to the 161.8? Now we come over, look at the daily profiles on the 30-minute chart. This is where it gets very exciting. This is something I have not seen in quite some time. And again, we have 1, 2, 3, 4, and now we're going to have 5 consecutive untested point of controls. So for me, what this means is highly probable we will come back and test 26,039 and a quarter. Now, when we start to get these point of controls stacked, being untested on top of each other, it's quite often in one day, we'll take out 1, 2, sometimes even 3 of these point of controls. And depending on how quick Jay Powell rug pulls that rug tomorrow, we'll see just how deep the correction actually is. Also, like the S&P 500, we did not hit the P point today. We did not hit the P point yesterday. We did not hit the P point the day before. So now that's 3 consecutive days, all leading to the fact we are likely going to get a pullback in the very near future. But I do want to warn you guys real quick, because something that was leaked out here today, Trump to China to discuss lowering China tariffs for fentanyl crackdown. And again, this is Trump's way of basically backing down a little bit, giving China an easy way out, saying, hey, you just got to try to crack down and we'll reduce some of our tariffs. And in turns, you go ahead and reduce some of our tariffs or retaliatory tariffs back and start buying soybeans back from us. Now, if you guys trade with prop firms and you like the copy trade, there's been a major change and you want to make sure to check out this next video right here.